Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today, I have an amazing guest. I have Robb Nelson joining us. How are you, Robb?
Wonderful, thanks. Tracy, and yourself?
Good. I am excited for this conversation. I love the work that you guys are doing. I am rearing to go, but first, let me introduce you to the audience and we'll take it from there. So, Robb, you are the CEO of Farm Lending Canada, and today we're going to be talking about supporting Canadian farmers through financing. So, before we dive right in, we have a lot of good stuff to cover. Can you tell our audience about who you are and your background?
Sure. Robb Nelson, CEO and co-founder of Farm Lending Canada. My background is 25 plus years in private credit, alternative credit, supportive credit in Canada, and 40 years of entrepreneurship. So I've always looked to see what markets need support and how we can help families within our communities.
Wonderful. Can you tell us more about Farm Lending Canada and AgriRoots?
Sure. So Farm Lending Canada is a derivative. It started in 2001 as a derivative of our first brand, which still is active, FamilyLending.ca, which is a mortgage broker, national mortgage brokerage across Canada. And we always provided alternative credit in both the rural residential developments and in the farming community especially. So we broke off the agricultural part of our business in 2018 when the rules started changing in the depository rules started changing. Credit unions started doing a lot of merging. And we saw a need for organized, education-based, sophisticated alternative credit. So basically, how can we help farmers when they need support, and what's that financing product look like? So that's a little bit about us. And so since then, we created a fund. Our main fund is called AgriRoots, and then our operating brand is Farm Lending Canada.
Okay, excellent. I love hearing entrepreneurial stories, and you touched on this a little bit. If you have anything to add, you can. But I always love hearing the mission, the vision, the why. And I can imagine I've been in the agriculture lending space, I've been in the real estate space as we are. I can imagine you've seen some frustrations and some voids in the marketplace. And I'm curious when you're like, okay, Farm Lending Canada, let's branch off, let's do this. What was the mission, vision, frustration, excitement behind that?
Yeah, first to start with our mission or our mandate. Our mandate is to support the Canadian farmer. And it's also to support the Canadian farmer who has some troubled times. So when the bank or traditional credit unions or FCC, it doesn't matter, because we're allies with all of them, you don't quite fit in that box, the traditional box. And the box is getting tougher and tougher with the way the credit boxes work. We wanted a safe place for farmers to come to and say, heck, I've had a bad year and I need some help. How do I get back to mainstream financing? How do I get through this problem? So with we wanted to design credit boxes that have the flexibility, but also give the path to healthiness of both the farm family themselves. So to kind of get rid of that stress level that they all feel, and they all feel isolated when times are tough. We're the safe place to come land. Talk to us. There's a bunch of farmers in the building, and we'll chat with you. We've lived it. We know it. And how we get you back to a safe place in traditional financing. So we're just that bridge, that short-term 18-month to 36-month term, just to be that safe haven. And we have a lot of knowledge. And we've seen your situation hundreds and hundreds of times. So you're not new to it. we just take our knowledge and say, here's a path to way to get things back.
I love it. I've been thinking about this a lot lately. We hear about farms across Canada having several years of drought, and then we hear about trade wars now and tariffs. And here is the crazy thing. It's not like a job. You go get another job and then you pick up, right? And you carry on. And I'm like, what happens? What happens when things go sideways? 1 year, 2 years, you eat up the savings, the bank doesn't want to work with you. So that really got me wondering about this marketplace that you're in, the alternative lending. So do you want to talk about that prior to you guys coming in the market? Has there been anything like this? Do you want to touch on that a little bit more?
Yeah, no, so great question. We're the pioneers. We're the first national organization because we lend in 9 provinces. So we're the first to have a completely structured debt in the alternative space. So still today, it is very fragmented, and there's about $9 billion of private debt throughout Canada right now. But it's all centralized to localized high net worth individuals and or companies that are lending their own money. Some have knowledge behind their money, but most don't. We bring the knowledge. That the big piece that's missing in alternative credit is how can we provide our consulting services in order to transition you out? How can we bring the whole team of people we know you're going to need to get you out of the situation? So we have national relationships with all kinds of other professionals inside the industry, and we've pulled them all together. So if we see someone that has a tax problem, we've got tax accountants. We see someone needs an agronomist, we have an agronomist. We see someone that needs family estates and wills, we have that. So we have the whole team around us that we've gathered along with our own knowledge and say, here's a team to help you through this problem. And they've all seen it too. So we're all here to listen. That's the big thing with our capital. We're here to listen to you. And so that's completely different than you must fit in this box in order for me to go forward with you. We want to hear your story. We want to know what got you there. And then we want to figure out what's the catalyst and to get you back to a healthy business cycle. No, you can't control Mother Nature. No, you can't control commodity prices. There's a lot of things you can't, that you might not be able to do, but there's ways to mitigate some of those things. And we have the tools to show you how to mitigate some of those things. And yeah, the farming operation has just gotten so sophisticated. What you used to, do on a few quarters in the West or a few hundred acres in the East Canada and survive a family of 6. This doesn't exist anymore. We have to look at much more sophisticated operations. And so that's what we do is we've done a lot of testing over the 25 years. We've helped, immense amount of farm families. And we bring the professionals together to support our community of farmers.
I like it. Oh, this conversation, Rob, is kind of near and dear to my heart. Honestly, I'm a farmer, right? And family, friends, we all farm. And you look at our operations. Farmers are smart people. You'll have good books, you do everything right, but there's so many things out of your control. And if it happens several times, and then you're in a position, it didn't quite make sense to me. It's like, okay, our back's up against the wall because of all these things out of our control. Now we're selling the farmer a piece of land. What? Is there not somewhere in between there where we can get some help? It just didn't make sense to me.
Yeah. So bang on. That's what we do. So we buy that time. So for instance, if they didn't insure their input and didn't have proper inputs, insurance, or
Yep.
they had a bad year, and we all know the rule of 10. We've got 3 good years, 3 bad years, and 4 break-even years. It just rolls that way every
Yep.
year. Well, you just don't know. You may go in your first year of farming, had 3 bad years in a row. So That's
Truth.
why we're here. I hate
Oh,
to say it, but we see it.
yeah.
And we're here as that mentorship, so that a lot of farmers are looking for mentorship. They're saying, well, how do I solve my forwards? How do I look at the future markets, and how do I do that? How do I structure all my debt? You know, because we see a lot of people come in with too many their capital debt's not structured properly. So, you know, we'll help them restructure their debt and get them to a debt service ratio that will work for the bank. So farmers are really, really, really good at growing something.
Yeah.
You there's no one person. I've got, 26 people in this office, and we don't overlap a lot of things that one person's really, really good at.
Yes.
Um, and so we're just the extra ears and knowledge base that, and bring our other teams of relationship professionals together. Say, here, you need a couple hours with this person or a couple hours with that person, because you can't be everything. The farmer centric cannot be everything.
Yeah.
We mention the story every now and then. We say, when you ran a family restaurant and you had 10 tables in a little family restaurant, that chef, hostess, mom and pop could take care of it.
Yes.
Well, now you've got 1,000-seat restaurant, and what are you going to run? The farming is 10 times, 10x the size now that it used to be. So, you go from 10 or 100 to 1,000-seat restaurant. The sophistication is completely different. So there's going to be points in the operation that you need specialists. And there's so many great farmers that they surround themselves with mentors and professionals, and like I'm not saying that doesn't happen in the market. We're only serving a small part of the market. But it's that part of the market that need that extra support.
I love that analogy real quick, and then I want to take you somewhere else in the conversation. But I come from corporate background. I was doing a corporate career before I started with Farm Marketer and grew this company. So I know all the hats that farmers wear as a farmer, as a business owner. But you look at it exactly like you just said. Farmers, not only like the craziness of farming, all the variables that affect the farm that are out of your control, now you have to take and put on 10 different hats. Like, that's a tall demand for farmers, mentally, physically, right? And in the companies I've worked at, they had the marketing guy, the finance guy, and those guys were roles in themselves. So I'm so happy you went there, because you look at mental health and financing and farming and everything that's put to a farmer, it is just a tall task. So I think this segues perfectly right to where I want to go next. You have your ear to the ground, you know what's going on in the marketplace. How have farmers been financially the last couple years, kind of leading to right now? Where are we at?
Yeah, no, great question. So there's a few things. We have the wave of younger farmers, or not in age, but experience in time as running the farm operation. A lot of them have not seen the troubled times we're hitting right now.
Yep.
So what we're dealing with and what we're seeing and how files have been adjudicated, so how the farmer shows up on our doorstep, is that there's inexperienced bankers, um, relationship managers, and farmers. They haven't seen the tough time. I've lived through a lot of recessions, and I'm over 60, so I've seen a lot of recessions. I know what tough times look like. And when to pack some money away and not buy a whole bunch of equipment, and everybody wants to sell the farmer. At every show they want you to buy new combines. They want you to buy this. The pickup truck companies emailing you, calling you every 3 years. You got to trade your truck. It's in. So they're just getting bombarded, and not to their fault, but they haven't seen the tough time. So there's a wave of both adjudicators or relationship managers that haven't seen the tough times, so they don't know how to put financing capital in place for some of the farmers. So it's not the farmer's fault. I'm going to say it's how they were led there. And so we're seeing that. We're seeing the transition from obviously the 2% and 3% debt, up to 5s and 6s now, and we're seeing the equipment loans are unbelievable. What we're seeing on balance sheets right now. So what really concerns us is we're balance sheet lenders. So we're not income. We don't look at income statements. We make income statements based on balance sheets, which is a different process. So we look at working capital. How much do you really have, and what's your equity look like in order to get you through whatever the situation is? Not what you could make, it's how can you get there?
Okay.
It's a different way of underwriting than traditional say, well, if we do all these forecasts and these things happen, life is great. Everybody make a positive forecast. I've not seen a business plan that doesn't make money. And I've owned a lot of businesses. I've financed a lot of businesses. Everybody comes with this business model that everything makes money. Show me the backup on the balance sheet that says that you can get there. That's what we want to know. So that's where we start with all of our files is understanding, what's the balance sheet, and then the character. We interview the borrower upside down and backwards, and we want to know all of their support system, who they are, what they feel like, what their goals are. We're interviewing them, make sure that they're in the right business, and then find out what they're missing. They could be a great chef, but not a good business person to run the restaurant. That kind of thing. So we'll get them the support that they need. They say, "Well, no, I just want to be in the field. I'm doing a farm transition thing for a client right now," and we identified the roles of the two young farmers, and one thought he thought he was going to do certain roles, and she thought she was going to do certain roles. And I said, and once we sat with them for quite some time, and I'm friends with them, and I said, you're going to go in this role, and you're going to go in this role. And then it was like a sigh of relief. They went, yeah, that's actually what I enjoy. But it just took several meetings and discussions and to see what they wanted to do. So that's the part of funding that we do. Anybody can lend money. Anybody can say, oh, there's lots of equity in the business and in the farm. We'll lend you some money. We'll see you in a year. We care. We want to make sure they're successful.
Okay, that's excellent. So sitting where we're at, we've seen the last couple of years, there's been some high commodity prices. The beef farmers have had some high. Now we've kind of had some tougher times. I want to go to right now because I think politically and everything that's going on in the world, there's a lot of farmers sitting here going, doo-doo-doo, right?
Yeah.
So from this moment, and I'm going to put two questions together because I think two questions I want to ask you because I think they go hand in hand. What's keeping you up at night? And really, what are you concerned about from here, considering what's going on and what may be coming?
So the concerns are what keeps me up at night, because we're attached to our clients and our farmers. We feel that we have strong relationships with them. The world unrest. It's not just what's happening with China now or the U.S. It concerns me that our internal infrastructure and is not prepared for this disruption.
Oh.
But on the positive outlook, I believe our long-term can be one of the most powerful agricultural producers in the world because we have all the resources. So what's short-term, the next few years, we're going to see a lot of pain. If these trade, again, these tariffs are purported, they can come and go. It's just as quick as they've been applied. We don't know what's going to happen and how long they'll stay or not at all. I know a few are in place now, but when the word war is behind it, it's a tool. And I want, China was, I want my EV trade our tariffs lifted, if you then they'll probably come and do something else. That's what happens in trade wars, tariff wars. They're not good for anywhere in the world, period. But that's just my personal opinion. I am a business person and an economist, so I do understand what happens to them. So what keeps me up is the mental health and wellness of our farmers. How are they going to get through this? These are fourth, fifth, sixth generation farmers. These are my friends. Just in the small community I live in, we have 2,000 farms in Chatham, Ontario. I play golf with all my farmer friends. I travel with them. We get together all the time. So I hear the real life stories. These are my friends. And how it impacts and how it has impacted, their father or grandfather in the 80s, or their some of their other friends in the 70s. There was all kinds of different changes over the years. Again, I'll really say the remote farmer, especially who lives in northern Saskatchewan or Manitoba or northern Ontario, that doesn't have a close community of people or professionals around them, to really say, you're going to get through this. It's going to be okay. I know it doesn't look like you have input costs covered this year, or, we may only get 50% of the value of canola in the West, whatever the situation may be. I just want to make sure that the farming community is well supported. And I think there has to be a lot of the community coming together. It's like, Canada has, and, with the elbows up kind of theme is, how do we embrace the farming community?
I share your concerns. Okay, what's keeping you up and what you're concerned about going forward? I think we covered that. And I definitely share all those concerns, and everybody in the audience too. There's a lot of apprehension, and rightfully so, right? Rightfully so. So, do you have anything that you want to add there? If not, let's go right into your lending solutions. High level, you're coming to the marketplace with some different solutions. You've touched on it. So if you want to touch on anything else, if not, let's chat about how you are supporting farmers with lending.
Yeah, great question. So we have a number of solutions. Our primary solution is bridge financing, or in the alternative space.
Yeah.
So as soon as they're not quite fitting in all or portion of the box from a bank, credit union, or FCC, or a provincial funder, we're here to bridge them through a transition period. So our average loans are 18 months to 3 years. So we're very short-term lenders. They had a bad year. They didn't have crop insurance. They need 300,000 for inputs, and they still owe the elevator money. They owe the seed company money, yada yada, fertilizer. So we'll come in and support them. We support it through financing through the equity in their farm, and then we do it so that we can roll that out to a financial institution of some nature within that 18 months. So get the money in, help them out. That's a lot of the primary work we do. Quick purchases on land. So when the bank can't move quick enough, we do that bridge close. So the farmer says, listen, I've got to close on this deal. And a lot of them are very high net worth, very bankable, but they don't have the infrastructure put in place to close on some land. I've got to close on it before the tax year ends, and I got to buy this land, and then I can have it refinanced. I've already got a commitment from my institution. They'll take do a takeout financing in 3 or 4 months. So we do a lot of that quick close. So because we can close in a few weeks on land, because we've got an internal infrastructure here to do a valuation of land anywhere in Canada, and based on their financials, we can look at their input values and output values and create the value on land. So we can manage very, very quickly on that. Then we have our equity release program, where farmers have no debt whatsoever, And they come to us with a plethora of different ideas. They say, I want to pay up early inheritance tax. I want to put some inheritance money into my children's hands. I want to go live. We just had a gentleman a while ago. He said he had about 5.5 million of equity. He owed 300,000 to a financial institution. He went to the financial institution and said, I just want to borrow 400,000 to go have fun. They said, no, if it's not for uh, farming activities, we can't lend you the money. And he said, what do you mean? I got all this equity. I don't want to sell the farm yet. It's a farm that was increasing by
Right.
about 6 to 8% a year. A farming operation, very profitable in its own right. But he wanted to distribute a little bit of capital. He wanted to buy an RV and him and his wife drive across Canada and back. So we lent him the money. He went and had all this fun, and we restructured a couple of things in his debt package and got him back to an FI. But like it was just, my son needs 100 for a down payment. My daughter needs a little bit of money for a down payment, and my wife and I are 61, and we want to go take a drive across Canada in an RV. Like, those are
Love that.
requests we get, and the smile on their face when they come in, to do the paperwork was like, that's why we're here.
Can I say something, Rob, really quick? That's neat that you say that, because the blessing with being a farmer, and I'm not going to speak to everybody, everybody's on different financial scales and ranges and debt levels and paid off. So it's all different. But the blessing, and maybe a little bit of the curse with farming, is and there's a book titled this, Land Rich, Cash Poor.
Or
So you are worth so much money, but it's out there. And it's over there and it's in the pen. And it's like, wait a minute, no, we can't go and buy an RV because, well, we need that money to operate the farm. So that's funny you say that, because it's a blessing and a curse. You've developed all this wealth, but you can't do anything with it unless you sell it, right? And who wants to do that if
exactly.
you're passing the farm on? So, oh, that's clever. Clever. Okay.
Yeah. So that's one of about 30 reasons we have our equity release program.
Okay.
Because we can have it with or without payments. We can capitalize, the interest payment on it. We see a lot of ways to create transitional wealth so that the parents can retire earlier. We're seeing right now, obviously, we know that our aging population of farmers, we've got about $600 billion of assets that will be changing hands in the next 8 years. And we've created some tools and products to allow that transition planning, so that there's tax strategies, there's insurance products that we have the relationships with. So we have the whole toolkit to say, how do we keep that generational wealth within the family? How do we do the waterfall? It's called a waterfall effect. Following the Rockefeller's model is to say, yes, we have a $10 million farm. If we sell the farm, which is our, one option, if we sell the farm, everybody, all the siblings, gets their proportionate share. If we put a little bit of debt on it to allow mom and dad, because mom and dad said, I need 55,000 a year to go live off it, or I need whatever, and then I need a life interest in the house on the farm. It's kind of common things we see. I want to live on the farm, pay me 55,000 a year. So we do a little equity takeout of the farm every year, so mom and dad can go live on it and go enjoy life. And it doesn't impact the farming operation, because there's always multiple parcels that we can utilize for that. And then the farm is transitioned at a younger age. So the child's not 55 when they receive the farm. They could be 40 or 35. So we all see that happen. And so we've designed a bunch of products that work together, and all of the professional teams that we have to say, how do we do that transition in the right way? How do we have an insurance product on top of this? Because unfortunately, we all pass on. How do we have an insurance product and fund that insurance product, because we do that as well, that will pay off the debt that grandma and grandpa put in, and actually increase the wealth of the family operation. So it's a completely different strategy when grandma and grandpa pass away, we have the growth of the 10 million.
Yeah.
Plus we have the life insurance policy. So it could be a $20 million valuation in 15 years instead of a growth at 13 or 14 million with normal increased values. So we've got a whole bunch of different strategies. So it keeps building. And then we can do a little more fair is not equal in the land of distribution of assets to the family.
Excellent.
Over time.
Okay. And then one other one, do you want to touch on this? The rural and hobby farm mortgages? Do you want to touch on that?
Yeah. So our hobby farm product is unique. It's not, it's different that we see a lot more hobby farms because of the consolidation of farms. We're seeing a lot of breakoffs, whether it's a house and several acres or, it can be 200 acres or 300 acres. So we developed a product that we manage across Canada, except for Quebec. So it's prime rates, starting in the 5% range. And what we do is we take the on-farm, so the off-farm income, plus we'll take $20,000 of farm income. We valuate 100% of the valuation of the property. So they could have some rental land, or they could have a few animals there. We're not so much on the equestrian farms, I'll be honest with you there. So it's allowing the people to live and stay in rural Canada, work off farm, and we'll loan up to 80% of the whole value. So it's not a commercial loan; it's more of a residential hybrid ag loan. So they qualify just like they would for a residential loan. So we want to see micro farming. We want to see hobby farms. We want to see that market flourish because we think it's a great lifestyle. So obviously during COVID, we saw a lot of people transitioning back to live in rural Canada. I think we're still at 3% on the farms, but we were at 60 100 years ago. People living on farms. Like let's just think of where we're moving back to. People want a little space. They want acreage. As part of the market. The other part of the market still wants to live in a little box and travel and do other things. So it's a very distinct difference. But we have a great product that we're supporting the mortgage broker channel and the consumer direct.
I love it. Okay, Rob, I'm going to ask a big favor here. You've done a nice outline and high level of these products. And I think we could be like, okay, that's great. Go to the website and find more information. But I would really love to dive into 3 areas because these financial lending tools are really filling a void, and you have me quite excited because of course I'm a farmer. I'm here for my peeps, right? I want everybody to be able to continue on and do well. I want to dive into those 3 areas and just go a little bit 101. And I know it's repetitive, but do you mind if we dig into each one and go through those scenarios? Do you mind?
Sure.
Okay,
sure,
perfect.
Yeah.
So, Rob, a farmer is in the audience and they're in trouble. They've maxed out their equity. They don't want to sell anything. They have no savings, whatever. I'm painting a picture here, whatever variation of that. The banker's like, it might be time to sell. And you're going, well, it's just one bad year. So how does that work? They call you, they email you. Let's walk through that and kind of speak to that farmer in the audience, just like you would if they were sitting right in front of you.
Sure. No, it's a great scenario. So the farmer, we're going to send a team member, a relationship manager to chat with them. So depends if they're localized. We have different people across the country. But we usually start with a call like this on the phone or Teams call to see what the situation is. So they call our toll-free number, and we have that open chat. And really what we're doing is listening. Tell us everything that's going on. And then we'd really like to listen to everybody that it's impacting inside of the family. So, because the farmer is a very proud person, and we might not get the whole story. I get more of the story from the spouse than I do the farmer.
Yep.
Um, so in all the years I've been doing this, so you listen to who could be the transition people, who are the people working on the farm, who tell me the five, six, seven, eight people, whoever it happens to be. I want to talk to them too. Um, and because usually it's been all pent up in one person, and that person has not told their whole story. So now they're working under duress and stress. Um, and until you can release that, you really can't make any real solid decisions. You need to understand the core of where the fire is, get the fire hose out, put the fire out, and then let's make a solution. Because then solutions are usually accepted, and then we can drive a positive path forward. So that's how we start all these conversations. And a lot of times it comes from their trusted advisor. Um, so we bring the trusted advisor in. So they're the sounding board, whether it's their accountant, their lawyer, their agronomist, the best friend, there's somebody that they trust that sometimes they've told this story to. Um, so then we look at the balance sheet and we see where is everything? What can we break apart? Because we know what financial modeling looks like, and we know what the bank or credit union or whatever the financial institution is to go back to or forward to. We know what their criteria is. So we develop the business plan based on what you can finance, not what you want to do, what you can finance. And so many business models we see is I've got all these great business ideas, but if they can't be financed, they're just good ideas. They're not something that you can implement. So yeah, so it's basically talking to the farmer, getting the stress and duress out of the way so that we can make sound decisions together. Listening to their objectives, what they want to do. Are they in the right crop rotation? Should they be adding value added service? A lot of times we've seen hog operations that shouldn't be operating anymore. We've seen displaced cattle operations where they got seed lots that are too far away. There's all kinds of different scenarios that you see. So how do we get that back? And do they want to be a farmer still? Is the big question. Why are you doing this? And most say yes, but the odd ones say no. I've made the decision that I can probably not head this direction. I didn't operate like my grandfather or my dad, even though I admired what they did. Or my grandmother, see a lot of female, not gonna don't want to be stereotypical here. Do I still want to be a farmer? Um, we ask that question. And I don't think enough lenders ask that question.
Sure. Yeah.
They just say, well, let's keep pushing forward. So, because this is a sole business, if the key persons aren't committed and they're not fully committed to make this right sized, we're not going to invest in them. We're going to suggest go to a different direction. So that's the difference in our type of lending versus some other, I'm not saying other lenders don't ask some of these questions, but we want to understand the people, like really the core people, because that's who we're invested in. Yes, we're securitizing against land and equipment and crops and all that, but we're investing in the people. And we want to know that they have the ability and strength and knowledge and the ability to reach out, because it's much bigger now. It's a whole different world. So yeah.
Okay. Perfect.
Does that answer your question?
Yeah, I think so.
Your
And
thoughts?
I do have one thought, thinking maybe about my nature, and I thoroughly understand, and I can be stereotypical here. And I always say, if it doesn't apply to your operation, just carry on. It doesn't matter. But there are a lot of stereotypical operations still in farming. So let's acknowledge that. And I'm a female, I could do it.
Yeah. Yeah.
So I understand that male mind, and we are confidential. We don't want to share our burdens. I want to ask you something, Rob. And I understand step 2, step 3, and getting the process going, but I am farm founder. I know the situation. I run the farm. Everybody else kind of just does their thing. can I just call you and can we just figure something out at this moment without really involving a lot of people? Like just you and I.
Oh
Hey,
yeah,
Rob, I'm in a
yeah,
tight spot. The farm's great, but
100%.
you know,
That's how we start. You know,
okay,
we
perfect.
we we listen to the core person first,
Yeah,
whoever that core person is. But for it to be successful,
right.
we usually that's kind of the second step is understanding the team of people behind the operation. Um, but yeah, and it's an anonymous call because we are licensed. The way we're licensed with all of our regulatory bodies, that's a confidential call. We'll never repeat a word to anybody.
Perfect.
So think of us as your doctor, lawyer, whatever. We are our ethic duties are to not say a word to anybody. So we can't call any of your lenders, your elevator, or anybody else, and say a word. So that's the confidence you have calling us.
Okay.
Um,
I want to say that, I like to, so much of life is all these things out here, but at the end of the day, there, a lot of the things that we don't want to talk about are the things that we just need to talk about, right? And I like to say, I kind of see all sides of the fence. Understand the male being stereotypical here and generational too. We have different generations still involved and different relationships. So I get the male, I get the female part, I get the farm founder, and I also get the Gen 2. So when I have these episodes, if something's nagging at me, I just want to ask it. And also, I have a super vulnerable, but also super private perfectionist side to me too. It's like, oh my God, I don't want everybody to know what's going on. It's just bad. It's let's just talk. I don't want the whole world knowing. I think a lot, and Rob, you will have heard this. A lot of the big mental health conversation is they're not going to go into town to talk to somebody because they don't want the neighbor to see the truck at the counselor's. I mean, that
correct.
kind of makes sense. So same thing with our financials. It's like, I just need somebody to talk to help me figure this out, and then let's go, right?
Yeah, yeah, that and very important. That probably uh, we'll talk to somewhere between 10 to 15 farmers, operations, and we may only fund three or four of them. So they're just conversations. There's a lot of conversations going on in our office, and in our team out in the West, is to say, what do you think of these ideas, and what do you think? And here's where I am, because you're right. The multi-generation is still alive for in a lot of cases of the person that's operating the farm. The pride that my last name is on the street or the road that my farm is on. Um, my grandfather started with the quarter section or 100 acres or whatever it happens to be, depending on what part of Canada it is. Um, and I cannot, you know, it's my duty. I was allowed to be the steward of this land, and I have to be able to pass this land on to someone else in my family. Um, but things have changed. Economy, though, it's a world economy now. It's not a local economy that you are feeding your family with localized trading. Now it's a global economy, and become much more sophisticated. Technology's got a lot more sophisticated. So it's not what it was. And we're not, as I said, you and I discussed this earlier. We're not operating grandpa's farm anymore or grandma's farm.
No.
Um, we're operating a business, and so there's new challenges, and some of that skill sets have been passed on, of how to grow and be a good steward of the land, but maybe not the skill sets of all the other new things that have come up and how to trade in the world of commodities, how to do all these different things. So those are the people you need to surround yourself with to help your farm operation. But yeah, I mean, we're dealing with such a low margin industry. You're going to be stressed always.
Yep.
Um, it's felt by all, even the very successful farm operators are worried about Mother Nature. They're worried about commodity prices. They're worried about everything that's going on. Now they're the ones, the big ones are affected with these new tariffs, and and geopolitical risks. And so, yeah, uh,
Farming's fun, Rob. And then I thought
yeah,
of this the other day and I laughed as a business owner and a farm business owner. I'm like, and then when things are going good, you're worried about when they're not going to be going good. Isn't that the
three,
nature
three,
of
and
being?
four.
Yeah, yeah, exactly like you just said.
Yeah,
Okay, I love that. So to me, I'm going in the threes here. And product number one, service number one is I'm in a pinch. I need that bridge. I need somebody to get me from this moment over here until we're back to status quo. So that's scenario number one. I think we covered that unless there's anything you want to add. The
no, that's
two
good.
other ones, and I'll give you a choice, maybe what flows better is the land comes up or a young farmer wants to get in and doesn't have equity. And then the transition planning conversation. So
Let's go
whatever
with
one.
yeah, let's go with the land and
Okay.
or transit the acquisition of land. So
Yeah.
an example, we'll get a call from Farm Credit Canada saying we've got a younger farmer, it's 5, 6 pieces parcels of land. Debt service coverage ratio looks good. We want to see the next year's statements before we'll let them buy another piece. But they've got this abutting piece that's 100 acres or 200 acres, whatever it happens to be. I'm giving a scenario in Ontario, and this is a live scenario. Um, could you bridge the purchase of that land for them if you want? You know, they just refer them to us. Um, could you bridge the purchase of that land? And if as the SCRs come in line with the next year's financials in 6 months when they're all completed, then we'll pay you out for the purchase of that property. That's very common with us. So they're in the midst of financial reporting. They're a little bit younger. They've maybe grown pretty quick. Um, and so we do all the modeling on what we anticipate the interest rate will be in 5 years, not today's current rate. So we do some other different modeling in behind the scenes because we want to do some testing to say if the interest rates were 7%, what would you look like? Not at 2%, which they were on the rest of your farm. What happens if they're at 9%? What will your DSCR, what will your debt coverage ratios look like? So then we can put that in front of you and say, are you making a good decision to buy this land? If this land can only produce $40 an acre now at 9% interest, is it a good decision? So can net profit. So we put all those scenarios in front of them. And so that's the difference in our lending is understanding that really that consulting piece. Because that's how we underwrite, because we need to get our money back too after we've lent it. So we're helping all of us. And then there's the other young farmers that we see that they've gone off. They went to agricultural school maybe, but then they went and they're working on a trading floor. They're selling equipment. They can do something in the ag sector or not at all. They're downtown, Calgary or Toronto, and they're in a whole other industry. They grew up on the farm. They've spent 10 years in the big city, and then the opportunity comes up. Grandpa wants to retire. Dad wants nothing to do with it, or any other siblings, but they need somebody to transition the farm to. And that young lady or young man says, I want to take over the farm, but there's been no debt on the farm. But then everybody's standing there. Again, we all know the what's fair is not equal story in the agricultural community. Everybody wants their equity piece. So grandpa's saying, you're going to hand this farm to one of the grandchildren, but there's other grandchildren and other siblings that want their share. So there needs to be a debt component for a period of time. But the person taking over has no experience and proven experience in operating a farm. So what we'll do is set them up with a proper debt to satisfy the other siblings and children of the grandparents, and they'll operate for 2 years, and we'll set the structure up so that at the end of the 2 years that they can transition into mainstream financing. So that is a very common approach. And we're mentoring them along the way to make sure that with the team of people we surround them with. So we set them up with a good foundation right away. So they know how to do all the proper reporting. So that's a common thing we do. It's a real feel good, and it's great in succession planning and training. The other parts of succession planning is, I think we talked on it earlier, is how do we satisfy everybody's needs? So we sit, we sit at the table or we sit with a trusted advisor at the table, and we like to reverse engineer everything. We get everybody's ideas, and then we look at all the ideas and we say, okay, out of those 10 ideas, only 3 of them can be financed. So it's great that those other 7 ideas are out there, but no one can finance. There's no financial product to get those other 7 ideas. So it happens much quicker because you're not fighting with everybody's ideas. Well, no, I want it done this way. No, I want it done this way. Because we're talking $10, $20 million farm operations now. And so we present them what can be financed. And then from there, then they sit with their tax specialists, they sit with their insurance company, they sit with the wills and estates and design a product, a solution, I should say, with the professional team to say, here's how we can finance that up. And here's how we can satisfy everybody's needs. It's a completely different way of looking at it.
I love that, Rob, because I'm sure you've noticed on the show, I've been doing a lot of transition planning episodes. I did it several years ago and I got really frustrated because I couldn't find answers, right? Like I want black and white, and I get that black and white is not that easy because all farms are different. But then I'm looking at this transition planning conversation, and it just seems to be the perfect storm. The parents, the farm founders want to pass on the farm, but they need to be fair and equal. But if they're going to start selling off land and this and that, then it affects the farming operation, and that's no longer viable. And then they don't know how they're going to make money and live if they are doing, like, I just can never see the answer on how to make this happen. And then we're like, farmers, why don't you have a transition plan? I'm like, I wouldn't either. It's scary, it's overwhelming, and it doesn't seem that anybody can provide an answer on how to satisfy everybody. I know lots of people have answers, but you know what I mean? It's just so many competing priorities.
If
Yeah.
you can identify the certain priorities that can be successful. And succession planning is the bottom line, if you do the black and white part, is about the finance part of it. That's the end goal. Who's going to get what? So if you reverse engineer it, you start from there and say, here's what people can get. Then you can easily answer a lot of questions. It's always been from I'm going to say, the needs basis of these are my ideas and this is what I think we should do. But there's so many sophisticated tools now that can help everybody get their needs solved. And it's not too often that we would ever see the farm having to be sold. We think that's their solid best investment. It's what tools you wrap around it in order to keep that asset. Like what better asset? Because if you take your money out, where are you going to go invest it? You're going to invest it in different markets or what have you. But if you've got an asset that can mature somewhere around inflation plus, we're not going to always see these silly growths. We've seen some pretty wild growth. I don't think technology and demand is going to keep those high growths in, but what better asset to reinvest in? And it's just distributing that asset through different channels, different tools. And it's just the average person, not alone the farmer, the average business person doesn't know these tools are out there. So that's what we do, is just expose them to those tools and those opportunities, and with the right professional team around them, say, there's some other ones. But we're seeing it in the business world too, with the baby boomers, and I'm a baby boomer. I'm the last year of baby boomers. We're all seeing this we have to retire. What are we doing with our business? How do we structure this tax efficiently, transition our business to someone else? So it's not just the farmers that are in there. There's every business in not every, but a large amount of businesses in Canada are going through the same thing. So farmers aren't alone. So that's the difference. And we see one of our tools allows the income stream, the rental income stream, for farmers to still own the farm, rent it out to a large management company so that they're picking up the capitalization growth. The offset on their living expenses is between rent and an increased growth of the value of the property, so they can still live comfortably off the land. And then insurance products that pay off that debt every 10 years or 12 years, depending on the life cycle of certain people. So there's all these different operations or tools out there that they can control that farm. That farm can be their last name forever and ever and ever. So there's many ways to do it. It's not just quick sale of the farm.
Oh, I'm doing a deep breath. Give me a moment here. And one last thing I wanted to share, and I don't think I've quite said it, and maybe people could read into my tone, but in the dynamics of farming, and again, I see it all, like all the angles, the non-farming children, the farming children. In the past, the farm would go to the eldest son. Let's just name how it was. And then we've seen the fallout of that. And then now we're seeing that conversation, no judgment, I'm just saying facts, about fair and equal. That seems to be socially acceptable. Okay, and that makes sense. Let's just go with that. But my concern, and I'm like, there has to be answers. My concern is we're going from the pendulum from one side where it's all to one kid to over here that we go so fair and equal that we kill the family farm. And that is my concern. And we have enough against us and we love our family farms. I'm so concerned that we're doing fair and equal wrong, that the farm's going to have to be sold and there's going to be no family farms soon because the pendulum went from here to over here with no real strategy to look at everybody winning and the farm staying intact. That is my goal, right?
You're 100%. So that's our focus, is to be as fair as equal as you can. There's always that one person or two persons that we know have spent the last 30 years. They didn't go to the city and get a 200,000 or 500,000 or 50,000, whatever off farm income job. They grinded it out 7 days a week at the farm, and they created part of that wealth. They're part of that wealth, and we recognize that, and we explain that. And again, some of it's received, some of it isn't. But there is financial tools available. There is corporate structures or tax structures, trust structures that allows everybody to feel that they've got their equal share of it. And again, not fair is not equal,
Right.
But there's ways that they're 18%, and someone might get 30, someone might get 22. It depends on how many years they've worked on the farm or what their contributing factors were. You can structure all these things, and they get the revenue from their percentage of ownership, not the whole pack. So we can create revenue off that share structure to say, here's a little bit, here's your proportion. You're going to get 10,000 or 20,000 a year. And it's no different, and it's actually better because it's a better tax structure that they're getting some revenue from it. They're still seeing the family a family farm intact. The family itself stays intact, because a lot of times the distribution, if it's fair is not equal, disrupts the whole family themselves. So we see the actual farm family, the people stay intact as a family.
There we go.
Yeah. And so that's the supporting of Canadian farmers. That's part of our mandate, is what products, what services can we offer, and what can we learn from the farmer every day? We learn something new talking to a new farm family and a new situation. And how can we incorporate that in products that we're developing?
Perfect. I love it. Thank you for sharing on that. Okay, so as we work to wrap the interview up, I have a few spots. You touched on AgriRoots earlier. I don't know if you want to touch on that here. I want to get you to share some advice on farmers. Like, hey, farmers, if you want to keep your farm operationally strong right now, looking at what's coming, I want to go there too. So do you want to touch on AgriRoots?
AgriRoots is our investment fund.
Okay.
So the primary investors within inside of our investment fund are farmers. So retired farmers, high net worth farmers, average farmers. So they're PFSAs, they're RSPs, they're liras, lists, whatever, and cash. So who's funding this is primarily farmers and some institutional. We're involved with several financial institutions that lend us money to lend through our fund. So that's AgriRoots, the operating fund. That's the lender in this. The brand or the company, the manager of all of our funds is Farm Lending Canada. So that's the differentiating. So we started out as AgriRoots, but we had Farm Lending Canada as a brand since 2007. And we just thought Farm Lending Canada sounds, and Family Lending, our two brands, just sounded better to tell people what we did. People were going, what does AgriRoots do? You know, and it was being the root in the agricultural world. That's what we meant it to be, but rebranding.
Okay.
That's all.
Perfect. I wanted to touch on that. So let's go to consulting, and then I want to pick your financial brain here for the benefit of farmers. So you, throughout the conversation, you've mentioned a lot of support. You don't just give out money, you're there to support as a financial team. So you do that around your lending products. Do you just do consulting as a service?
No.
No?
So we're not pure consultants.
Okay.
But we refer you to the consultants that are on, in our professional organization. So we have strong relationships with national consulting firms. And so that will, based on your needs, we have our Rolodex of people to call on and say, these people, because you need someone day in and day out if you have a true consultant.
Right.
And then you may have specialty. Our consulting is based on the financial exit. So how can we look at understand your situation and consult you back to mainstream financing? So our consulting is very distinct to our product.
Okay, perfect. I wanted to clarify because, and I think you're still saying if I'm in the audience and I want to find somebody, I could probably reach out and you'd be like, hey, we can help you here, or okay, perfect.
We spent 25 years gathering all these people up and trusted people. So happy to refer you to somebody that's on our trusted team of people, because they do the same for us. So if someone calls somebody at an accounting firm or a legal firm or whomever, be a grain elevator, and they say, "Geez, I'm having a tough time. You know who I talk to?" He says, "Oh yeah, call the folks over at Farm Lending Canada." That's something that they work on. So it's two-way, and there's no charge for it. We don't get paid for it. We just do it out of support of the farming community.
Rob, and I'm actually glad I brought that up and that you clarified, because me, as a business owner, farmer, there's also always a lot of hesitation. It's like, okay, who do I call? Like, who knows this? Who can I trust? Who actually knows their stuff? So there's value in that. When you're sitting there and you just need help and you need a smart brain, okay, where do you turn, right? Where do you turn? So there's value in that. Hey, Rob, this is what's going on. And you can say, oh, that's us, or here, I'll refer you. Okay, perfect. Thank you. Yeah. Okay, I want to pick your very smart financial brain. We're always trying to add a lot of value. I love the work you're doing, supporting farmers. If a farmer's sitting there, and obviously all the things we're dealing at, do you have any tips on how they can, tips on mistakes to avoid or things to do to stay strong during these times right now and what's coming?
Yeah. Because there's a lot of unknowns, And I know this sounds fairly straightforward, but it's not always managed. Um, it's not the amount in your general account that's going to take you forward. It's the ability to structure equity, of what equity you have that could be utilized to take you forward. More often than not, a farmer tells me that they haven't utilized their line of credit, or there's so much in their general account, they're good. Or their general account is empty and their line of credit is exhausted, so they're bad. But they're not looking at the true capital of their asset, and identifying and understanding how to read their financial statement. And so go to whoever manages their financial statements, or they can certainly come to us. We can look at financial statements, because we're all trained in that space, and say, here's where we see some pitfalls that are going to happen next year or the year after, or are going to happen this year. And it's usually, if they're good financials, we can look at them within a few hours and help them with the business plans. So that's where they get their financial advisor, in the farm advisor. That's their role. So get connected with a really good farm advisor that will spend a few hours, and then find out who on the team should be doing what inside their organization, and find out if they're happy. I'm going to say we've got just a dynamic group of people here, but they're doing the roles they want to do. We haven't put anybody in a role they didn't want to do. So, our team here is so connected, and they're, giddy and happy and doing what our mandate is. And they understand what we're doing. And we meet every Tuesday and we flush these things out, so it's a small firm, but that's important. So understanding financial statements. And most people don't know how to read financial statements.
Yeah.
They look at the general account and their line of credit.
And I'm looking at that as a business owner of farm. It's like cash in the bank, line of credit. What else is there, right?
Yeah. No, there's a whole bunch of assets there that need to be looked at. And,
interesting, eh?
So that's how you do proper modeling. And we have a lot of farm people here. So we understand that, how the accountant statements are prepared, whether it's accrual basis or cash basis. And we understand what really is going to happen at a certain time. We can predict it quite quickly.
Wow. Nice. I am a business person. I'd like to think I'm financially savvy, but there's like that level. And then there's like 2.0, the people that know the things from here and different things that we don't think about on a day-to-day cash in the bank, line of credit, financing brain, right? Okay. Well, that's good to know. Okay. Financial advice for farmers to keep them safe and strong for the next coming years. That's a good one. If you have anything to add, go ahead. If not, I want to ask you about that farmer that is financially in a pinch, Rob, right now, or they're like, I don't know what I'm going to do going forward. I really want you to speak to that person. I want to throw one thing in there, though. I find it quite ironic that we talk about farmers and their mental health. And we say, detach yourself from the business. That's not your identity. But I'm a business person, and I know when business ain't going well, I feel it. I don't care how great my life is. I feel it. Now, you look at farmers, I don't care what you're going to tell them about their mental health. If they're looking at those financial statements, the current conditions, we're going to have some mental health concerns. It's natural in our makeup. So speak to that farmer in the audience that is in a pinch and is like, I'm so embarrassed. I don't want to talk to anybody. I'm just leaving it. Hopefully it'll figure itself out. Or the farmer that's like, okay, I'm concerned, Mayday, but who in the world do I talk to?
Yeah, so there's two streams of thought that way. So you have your trusted person, whoever that trusted person who is not connected financially to your operation. So they it's not going to change their life by giving you advice. That's your most unbiased person. If someone's financially tied to your operation, they're going to give you a different spin on it. I mean, and you have to be extremely truthful and humble about what you know and what you don't know. And that's I'm going to say evident in our our firm here. Everybody's humble. Everybody's transparent. If they don't know that part of the business, they don't pretend to know that part of the business. They go and ask somebody, two desks over or wherever it happens to be, and understand that. So, we're very strong proponents of that. So your unbiased, trusted person is usually the good first starting point. That has no financial ties. Then there's firms like ourselves, there's hotlines, there's other advisors. There's tons of farm advisors out there that are well schooled in being consultants and advisors in this space. We do have one person on staff, Jose Lamont, that was in consulting and worked at M&T, and she's very well trained in the space. But they're going to look at the business and the psychology behind it just as much as how to exit it. So you want somebody that is not attached financially whatsoever to the operation. They're not going to benefit from you. The accountant will give you some basic advice, or have some farm advice. They're going to give you financial advice. The advisor who's trained a lot more in giving structural advice. Lawyers give you different advice. Everybody gives you a little bit different advice. But the advisor, our firm, we're very transparent in whether we can help you or not. So as I say, it's about 3 out of 10 to 15 deals that we see that we actually fund. But we have great conversations with people and give them suggestions, along the way. You know what I mean? So we might not be able to have the solution for them, but we'll point them in the right direction. And that's really where I think the farmers that are going to see some stress and are feeling a lot right now for uncertainty, reach out now. Make it an actionable item now, because there are solutions from somebody somewhere for you.
Yeah.
And you just have to talk to a few people, and within a few phone calls, this is such a small community that someone will be able to point you in the right direction.
I love that. This is so near and dear to my heart. And especially as we're in these times, it's a business and it's not all that's important, but it is important. It's not the be all, the end all, and everything is figure outable. Like that push and the pull between the farm and how important it is. But somewhere out there, there's answers. This is not the end of the line. And that's really why I'm so thankful to have you on the show, because nobody really gets into the weeds and talks about the hard stuff. Let's name it how it is. Who's there with the financing for that hard moment, or those out of the box moments, or those, hey, this is clever plan to make everybody win. So I appreciate that. The slogan of the show, bringing you the people and ideas that will impact your farming operation. And I am thankful for this conversation. It drives me bananas when people don't have the hard conversations and people don't come with the solutions to the hard problems. It's personal, but it is business. It's not a personal judgment on us. It is business, but it is so personal because it's our farm, right? And the multi-generational makes the pressure that much more. So I'm happy somebody's coming here and saying, hey, we're here. Like, just call us. We'll talk. We'll figure it out. And there are solutions. This is not the end of the line for you or your farm, right?
Correct. There's and then there is the very unfortunate when some farms have to be sold because things have gotten to the end of the line. But at least they talked it through.
Right.
and they've heard it from a non-biased opinion that says, yeah, financially, you should sell the farm, you know. So there is those situations that we see. They're over levered. There's no way they're going to be able to service any debt on it. But we'll just reassure and say, yeah, it's probably best that you tap on the neighbor's door or go sell the farm, you know, in the market, and have that gentle conversation. You know, we see a lot of Kleenexes and hugs in our business where there's a lot of tears shed because they're stressed, and they want to know how to get out of it, and that's what we're here for. That's what true alternative supportive lending does. We're not a private lender. A private lender lends on the equity on the farm, and if you pay that year, great. If you don't, well, we'll renew it until your equity is somewhat eroded. That's not what we do, and that's not the purpose of our firm. Is support, you know, and let's transition them back to mainstream funding as fast as possible.
I love it. There's been, and I know we touched on that, there's been such a void in the marketplace. So I'm so happy that you guys are coming in and saying, Canadian farmers, we're here to support you. Let's have a conversation. So if you have anything else that you want to add, this conversation was great, Rob. I thank you for your time. This is one of our longer episodes, but I felt it was important, not just for you to say, hey, this is what we do, bang, bang, bang. It's like, no, let's talk about that farmer. Let's talk about that process and get into the details. I think there's a lot of value you just delivered to the audience, and I appreciate it. So any final parting words, and then where can farmers connect with you if they have questions and want to find out more?
Yeah, great. I guess we've covered everything, and I really appreciate and respect the insight and the questions and understanding that we understand, just like, you know, the market does, of the need of supportive financing. To find us is at Farm Lending Canada, or farmlending.ca is our website, or 844-833-FARM. It's pretty easy. 844-833-FARM. Call us. And you talk to our deal desk first, and then they'll put you with, if it's a commercial farm, they'll send you to the commercial department. If it's hobby farms, they'll send you to the residential department. But yeah, and then if you're in Winnipeg, we have Jose, or Medicine, Pat. We've got Chris. You know, we have different people across the country, and then we're plugged into thousands of mortgage brokers. We have about 14,000 mortgage brokers on our platform that send us business. So, and a lot of the ones that are sending us business are farm family mortgage brokers. So we have other people in other communities across the country that we say, oh, you know, we know a broker in Regina, or we know a broker in Lethbridge or whatever, and we'll refer you over there, and then they'll start the conversation with you. So again, our team is, even though we're only 26 in the main office, it's a pretty supportive network that we've developed of people.
I love it. Rob, thank you for your time, and thank you for the work that you do. I appreciate it.
Well, thank you. I really appreciate your time.
It is my pleasure. You in the audience, if you enjoyed this conversation, if it provided you relief, you want to know more, check out the website. We'll put all those links on the show notes as well. And if you're curious about learning more, stay tuned, because I'm going to be chatting with a few of the team members over there about the alternative lending products. So you won't want to miss those segments. And most importantly, I say it at the end of every episode, but if you like this episode, share it so other farmers can hear about this. This is important stuff. So thank you for tuning in, and we'll see you next week. Bye-bye.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.